joining the largest market index in the world, the S&P 500. And that will be effective Monday, December the 21st. On Friday, December the 18th, Tesla closed at $695. That's a record high per share. That's phenomenal. It's absolutely brilliant. You know, and when Tesla joined the S&P 500, Tesla will be the sixth largest company in terms of market cap, which will be 640 billion. You know, the S&P 500 is a measure of the 500 largest company in the US in terms of market capitalization. Now, what exactly is S&P 500? Yeah, S&P 500, it's a hypothetical index. It's the market index. So when I talked about the diversified portfolio, I talked about mutual fund and I also talked about index fund. Mutual fund is when you have a pool or a basket of individual stocks where if one goes down, it can be supplemented by another going up, but it's managed by a fund or a hedge manager. In that case, you are paying a 3 to 5% commission fee. On the other hand, you have the index fund, which was created in 1972 by the founder of Vanguard, John Bogle. And what it does is that in any particular exchange, they will choose the best economist, accountant, financial planner, business analyst, and they will select the best companies in that exchange. So instead of you buying a fund which will be managed by a fund manager, you simply buy a fund which will track or mirrors or mimic a market index. And in the case of the US, one of them is the S&P 500. If you go to UK, you have in the London Stock Exchange, you have the FTSE 100. If you go to France, they have the CAC 40. So those are just, measures of, the biggest companies in that particular exchange, which on the most part is difficult to beat because they always outperform. And as such, Tesla will be among the top 10 holdings of the S&P 500, which is phenomenal. So if you find this type of content valuable, please consider subscribing and press the notification button to be notified anytime I upload a new video. By the way, it's Victor from VE Universe. As you can see today, I'll be having a reaction video, which is kind of different from my regular direct one-on-one video. Today will be a reaction video. And at the end of the video, I'm going to talk about what the future holds for Tesla. My own price prediction as compared to some of, the journalists, the analysts when it comes to the stock market. So now, why don't we listen to some of, the tops when it comes to investment? We'll be listening from the charismatic Jim Cramer of Mad Money and some of the experts on Tesla joining the S&P 500. Let's go.
COVID relief, COVID cases, COVID deaths, COVID vaccine. When you hear the litany, you think this market only cares about COVID-19. Yet the action today, Dow falling 124 points, S&P sinking 0.35%, NASDAQ declining 7 basis points, had nothing to do with COVID and everything to do with Tesla's admission to the S&P 500 at the close of trading. That means the whole index needs to be rebalanced to make room for a stock that just won't quit, including today, where Tesla closed up $39. For a while now, Wall Street's been fixated on the gyrations of high-flying super stocks, and it doesn't get more high-flying than Tesla. Darn thing's already up 70% since we learned it was going to join the S&P. But to make room for Tesla and the S&P index funds, well, the other components had to be sold today. Usually new entrants to the S&P are so small, but Tesla is one of the 10 largest companies in America by market cap, so the impact reverberated throughout the whole market. We keep coming back to Tesla because it's captivated a whole generation of investors who don't mind paying up for a $650 billion technology company that happens to make cars. I think the evolution of Tesla, the stock, not the company, has changed the character of the entire stock market. I think it's the most important story in years. Sure, we've seen this trajectory before. Under the leadership of Jeff Bezos, Amazon's taken over the world. Netflix became a national pastime, right? And we celebrate what CEO Roy Reed Hastings has done. We believe him all the way. But Tesla takes that same story and cranks it up to an 11. It's become the ultimate love the product, buy the stock, with a legion of adoring fans. Again, Amazon and Netflix have the same dynamic, but you don't see people worshiping Bezos or you don't see them worshiping Hastings from Netflix, even though I think they should. No, they worship Elon Musk. In a way, Tesla's a bit of a lottery ticket that paid out for a huge number of people. You just had to believe. The rally's been so visible that it spawned a new generation of investors who want individual stocks, not index funds, because index funds can't give you such returns. Personally, I'm a big believer in the car, the stock, and the man behind it. You don't have to like Elon Musk. I mean, the guy called me a simulation, but you should respect his ability to make money for you. I bet Tesla has more upside as Musk keeps meeting and beating his targets. I'm thrilled the stock has made so many people so much money. And I'm ecstatic that it's helped a generation, whole new generation, fall in love with stock picking like I did in 1979. Now, once the index funds finish selling everything else to make room for the $650 billion behemoth, I'm betting the Santa Claus rally resumes.
Bring in Tim Higgins from the Wall Street Journal. Tim, I was going to ask you as well about the significance of Tesla joining the S&P 500, both for the stock and for the company. How big of a milestone might this be, and do you think it would really happen?
Well, it would be two things. It would be prestige. It would be kind of a recognition of Elon Musk's vision and dream for the past 16, 17 years to bring the electrification of the automobile to the industry and to essentially rise to the ranks that he would be part of, the benchmark index for U.S. equities. A huge win in that regard. But for the investor, a big win because usually the stock sees a run-up when they get put into the S&P 500 as index funds race to put that in there. So the benefit might be short-lived. Usually about a year later, the research shows those equities then decrease in value. They trail behind the S&P 500.
Tim, do you think there would be some reluctance because the stock price run-up has been so sharp? I mean, wasn't the stock, it was below 300. Did it go below 200 briefly early last year? This has been a huge run. It makes Elon Musk like the fifth wealthiest person in the world. Would that be reason for pause to say, let's make sure that this is for real? I mean, again, that's just the stock price portion. The profitability should speak for itself. Theoretically, I just wonder if that kind of parabolic move would cause some hesitation.
Sure. Some investors don't want to get near Tesla. They're concerned about the fundamentals of the business. If you look at longtime observers of the auto industry.
Yeah, Phil, final question for the report tonight. You mentioned about 500,000, that vehicle forecast maybe for the year.
Yep.
Do you think it's, should we expect that they will put out full year guidance given the uncertainty that we're facing?
I'm not expecting it. I think if they are not going to hit that 500,000 target, they won't say something until late in the year. Because Elon Musk believes a couple of things they've got going in their favor. One, they got a half a year to make up for any potential shortfall where they might be in terms of their internal targets. And two, China continues to expand in terms of production and in terms of deliveries. So they are, that's momentum on their side, that gigafactory in Shanghai and the deliveries over there.
All right. Phil, thank you. Thanks to Tim as well for bearing with us. So Tim Higgins.
Driving straight into the S&P 500, the electric car company making a big U-turn in the after hours as it gets added to the index. Here we are down by 3%. This, of course, after Tesla hit yet another record high during the regular session. Karen, we've all been watching this very closely. What's your proclivity at this point when it comes to the stock? Earlier you said you would look to short it.
Yes. Thank you for bringing up a very painful trade. So I put it in order to short market on close. And then when I saw the stock trading down at maybe 3:40 p.m., trading down, right? $10 or I don't remember, 12. I thought, wow, this is not quite what I was expecting, how this was going to play out. So I canceled my short, and it ended up the market on close price was what, $6.95, I think.
Yeah.
So that was very distressing that I did nothing. I would have covered right away. I was trading the after hours or Monday morning. So I have no Tesla position, and yet I feel worse than I did yesterday having no Tesla position. I don't know.
Let's bring in Grace Faddis of Grace Capital. She joins us now. We have some technical issues which we've ironed out. So Grace, we're happy to have you here join the panel. In terms of Tesla, I think you're, amongst the broader trader panel here, you're actually bullish longer term.
I am bullish on Tesla. I think Tesla is being priced. It's expensive, okay? Everything is expensive. New York real estate is expensive. I think Tesla is being priced like a monopoly, and it reminds me of Amazon. Okay, you could have bought Amazon and you watched it go up and up and up, and nobody understood. Tesla has a market cap that's larger than all the other auto companies combined. I think it's got a lot of optionality here. And the secret to Tesla, so long as they can keep borrowing money for cheap, convertible stock, convertible debt, the stock is going to work. And the strategy is going to work.
And they've done that several times this year in terms of shoring up their liquidity position with various secondary offerings, et cetera, in the marketplace. Brian Kelly, at one point, was Tesla ever one of those stocks that you put in a drawer and you leave?
In fact, what a phenomenal memory you have, Melissa. In fact, it was one of those. And it's my view on this, and the reason why you put it in the top drawer of you buy the stock, you put the certificates in the top drawer, or at least the top drawer of your digital side table. Nonetheless, the point being, I think Tesla is more than a car company. I think the investors in it are thinking of it as more than a car company. I think this is a play on the decarbonization of the electric grid. The Tesla automobile and their automotive department is just kind of the proof of concept. So if you think of this much more as a venture capital deal, where all these capital raises are similar, are like a series A, B, and C, then you can see how there is much more upside to Tesla. And I think that's what the investors in Tesla are looking at.
All right, let's bring in fast money friend Gene Munster of Loop Ventures, who I know is watching the rebalance at the close very, very closely. I think with popcorn in hand is what you tweeted, Gene. So what'd you make of the action here? What should we expect on Monday morning?
Well, I made the action. It's funny. I tuned off a minute before the close here. I had to apologize that I was remiss at leaving the party just before the fun started. But I expect it probably moderates a little bit on Monday. But what's more important is ultimately where this company is going. And if I can frame in, I think the panel's done a great job of really highlighting the importance of the story here. Which first, there is no valuation support to Tesla regarding their current business, the current revenue, $45 billion a year. But when you think about the optionality value, and I'm going to make it as simple as possible, there are 7 different verticals that they're going to be going after. Most people think of this as an EV car company, but there's autonomous taxis, robo-taxis, you have HVAC, insurance, even down to electric jets. I mean, all of this is on the roadmap. So I think Brian's venture analogy is most appropriate. And I think that regardless of what the action is on Monday, I think that this company can be a much bigger company in the years to come. And one thing I just want to, there's one thing to look at the headlines and listen to what Tesla is doing and get enamored about where the stock can go. I think there's another discipline, which is actually just measuring what's going on in the marketplace. We recently looked at the software that's available and coming available in the next year from the automotive companies across the board. And Tesla stands above. It's not even close. I won't get into the details of it, but this company has a multi-year advantage in a market that will be turned upside down over the next decade.
Gene, everybody's looking at this event as a forced buying event because managers will have to buy about $85 billion worth of Tesla stocks who are benchmarked to the index. And yet this is also a forced selling event. And not many people are talking about that in terms of what do fund managers sell in order to make room for Tesla. What's your view? You cover some of the high-flying sort of consumer discretionary techie type of stocks that might fall into that category.
Yeah, there is going to be a fracturing of FANG. It's very clear what's going to happen in the next few years, and what has worked in the past won't work in the future. Companies like Apple are really well positioned in the digital transformation. I think you're going to see money inflows to this. I think this is a $200 stock in the next year plus. But then on the flip side, you look at companies like Facebook and companies like Netflix. I think that those are sources of capital for these funds. I think just other traditional businesses are sources of capital, but I think that's going to be a strong theme of this fraction of FANG. The simple approach of owning FANG isn't going to work for outperformance. There's certainly great companies, but I think Tesla is one. You just need to own it and don't think about it. I like the idea, Brian's put it in a drawer and forget about it. But I think companies like Apple are really going to be a big beneficiary, and Facebook's got a ton of headwind coming at it in the next couple of years.
Gene, great to speak with you. Thank you. Gene Munster, Loop
Thank
Ventures.
you.
This change is also going to have a significant impact on the S&P 500 more broadly. Tesla is now the 6th largest company in that index, and because of Tesla, the S&P's earnings will fall 1.3% next year. Its PE ratio will rise to 22.6 times from 22.3 times. Tim, what do you think? Do you think that investors should will feel this change? The volatility of the S&P 500 would theoretically go up too because Tesla's volatility is greater.
True, but it's also a $660 billion company, and conceivably there's more of a buffer built into that. But I think the valuation on the S&P is troubling. But you add in a 1,200 trailing PE stock here. I would just add to the whole story around Tesla, which people well chronicled, that I haven't been a believer here. But two events have added basically almost $400 billion of market cap, seemingly. A stock split announced on August 10th or 11th took the stock up 83% to a blow-off top at the end of August. And then the S&P inclusion announcement, I think from November 16th through the current, is another 69%. It's a 150% move in the stock based upon two technical events for a stock that has been about technicals as well. So I think you have to remember that here. And I don't care what anybody says; those are very big factors. I think that will weigh on the stock.
So now that we've heard from Jim Cramer and the rest, I am also bullish on Tesla. I do own Tesla shares. I think the company is valuable, but I also think it's not fair to compare Tesla with some of the other companies in the automobile, the NIO, the Hyliion, the Lordstown, because Tesla, it's a high-tech company. When you look at their cash flow, they have Solar City, Maxwell Technology, SpaceX. So it's like comparing a butterfly to a bird. You cannot compare, a butterfly and a bird. They are two different categories. So that's why you see Tesla being so productive. My take is that with Tesla joining the S&P 500, you might see a dip or you might see a hype. It all depends come Monday. I also do believe after Tesla joining the S&P 500, there will be a rebalance correction, which, if there is a slight dip, I will be okay with that. I am holding Tesla for the long run. It's not something that I want to swing. It's not like 2 days swinging or a month. I will hold it. I also remember that when they did the 5-to-1 split, Tesla was sitting at $2,250 a share. When they did the split, that's what brought it down. So it might get back to where it was initially or where it actually belongs. Some analysts, we have Cathy Wood predicting, very smart lady, predicting that the share of Tesla, it's supposed to be $4,000 or $7,000. Drop me a comment down below. What do you think? To me, I just want to see it go back to 2,500. I see Tesla being valued between $2,500 to $5,000 a share. I'm also bullish on that. Again, this brings us to the end. So consider subscribing, share the video, drop me a comment. What do you think? Tesla joining the S&P 500. What do you expect to see on Monday? Would you see a hype or would you see a dip? Until then, I will see you on the next video. Have a nice day. Goodbye now.